Welcome to Digital Currents, brought to you by Morgan Creek Digital. I'm Xavier Segura. Each episode, we spotlight the topics and people changing the tech industry with a focus on AI, blockchain, chips, and big data. Thanks for listening, and please make sure to subscribe if you like what you hear. And remember, stay current.
All right. Welcome, everybody who is connecting here. It's Mark Yusko from Chapel Hill, back home for this beautiful fall weather we're having, which is a nice relief from the not so nice late summer we had down here with all the rain. Although I shouldn't complain given what happened in Western North Carolina, which they're still recovering from. But all good down here in North Carolina. Not sure if the guys up north are joining. I know Sachin is teaching today, and X may or may not join, but we set this call a little bit to talk about or debrief on our recent travels, in the spirit of Around the World. I used to do the Around the World podcast, and Around the World, we did the 6 weeks during COVID, but we have been traveling a lot lately into the Middle East and Asia. And one of the things we have observed is some pretty big trends going on in those parts of the world. And we thought we would bring that back and report back to investors and listeners on those discoveries. And also, if you got questions about that part of the world or anything about the digital age that we're working on, the ABCDs, AI, blockchain, chips, data. So let me start in the Middle East, and then we'll continue around the world. But we decided about 9 months ago that we would move into the region, both for fundraising, but also to explore the types of companies that were starting to emerge around the areas of focus for the fund. And interestingly, the story in the Middle East in particular is very similar to what we saw with telecom and the whole leapfrog phenomenon, where you can get better cell service in Nairobi, Kenya than you can in New York City. Well, why is that? Well, mostly it's because they didn't have the tech debt or the tech infrastructure investment that they had to, move away from. They weren't busting up their monopoly on copper wireline phones to adopt the new technology of cellular. Plus, they weren't trying to retrofit old technology with new innovations, but they started with the new stuff because they didn't really have very good service before that. So in a similar vein as the Middle East, and when we talk about the Middle East, we're particularly talking about Saudi Arabia, United Arab Emirates, of which there are 7 countries in that, or emirates in that group. And there are other things happening in places like Qatar and Oman and a few others. Primarily, the big moves in digital are happening in Riyadh and the eastern provinces of Saudi Arabia, Dubai, and a few of the other emirates like Abu Dhabi. So what does all that mean? Well, starting in Saudi Arabia first, and this goes to one of our portfolio companies in Fund 3 and Fund 4 called Grok. Grok is a really interesting company. You've heard us talk about it in the past. The reason it's so interesting is it's really at the center of this just explosion in activity around inference for AI. And, there's multiple parts to the AI story, but, the one that people are pretty familiar with and probably benefited from in your portfolios is the NVIDIA story and the training story. So the short version of the long tail is, we had CPUs for a very long time, from the beginning of time when AI was first coined back in 1955, all the way through kind of, the 2010s, late 2010s, late 2010s, mid 2010s. We had CPUs, central processing units, that were driving all of the innovation around computing. CPUs process code, right? Words, single dimension, and they process serially. GPUs came along, an evolution of the graphics processors that were being used to enhance video games, right? NVIDIA was a video card maker. AMD made video cards to make your games go faster and to do the refresh rates faster. But also they noticed that they were doing something unique in that they were parallel processing. So they were allowing these mathematical equations that have to occur to do things like encryption or security or high rate calculations, just to do it faster. And there's just been an explosion over the last really 5 or 6 years of GPUs taking over, and suddenly AI was super hot again, right? You can't go a day without reading a story about some big AI company getting a big valuation, basically for an idea, and some people spitting out of OpenAI. And there have been real innovations around large language models and other applications of artificial intelligence technology. I always keep going back to, the other father of AI, not Geoffrey Hinton, but the other professor from Berkeley who said, the problem is 90% of what people call AI is really not intelligent at all. It's definitely artificial, but not very intelligent. And that ratio hasn't really improved all that much. But GPUs certainly made one part of the AI problem better, which was this idea of training models. So basically you can say to a large language model, go back and read all of the works of William Shakespeare and, write a sonnet in William Shakespeare's voice. And it can literally, faster than a human, go back and read all of the works, memorize them, know all the punctuation and the cadence and the iambic pentameter and all the things. And actually, basically using an interesting technique, put together a reasonable sonnet. Now, I tried that same experiment saying, go back and study all of the Taylor Swift songs and write me a song in Taylor Swift's voice. That was a miserable failure. I mean, I thought I was going to get some big thing and sell to someone in Nashville and make a bunch of, I'm just kidding around. But it really was bad. I mean, it was horrible. But the process that allows that is a thing called training. And training of models requires lots and lots and lots of calculations. CPUs really couldn't do it. That's why we had Clippy and how limited that was in AI. And GPUs came along and made that possible. And the value of NVIDIA exploded, right, to become yesterday the most valuable company in the world at over $3.4 trillion. Amazing. Now, what's really interesting about that is that's not even the most important part of AI or large language models, which is the inference part, right? When you type a question or a prompt into ChatGPT, and it starts to spit back the words, a year ago, it would show a word, then there'd be a little wiggle, and then another word, a little wiggle, another word. And every time you saw that little wiggle, it was doing a calculation, a series of calculations, actually plural, on what's the probability of the next word in the sentence. And that's how it works. It actually doesn't search the internet for information in the early stage. It didn't. More on that here in just a second. It actually just infers what the next word would likely to be based on all the training it's done. So it has to do, billions and billions, in some cases trillions of calculations across hundreds of millions, in fact, in some cases billions of parameters. And it just took a lot of computing power, a lot of electricity, and lots of infrastructure. Well, if you've noticed over the course of the past year, each iteration of ChatGPT or Claude or Perplexity or anything else, that wiggle time has become less and less. And that's because there have been tools that have been created to make that inference process better. And what does that mean? Well, the difference between processing serially versus in parallel is a big increase, about 100x faster. But to do what the brain does, what a neural network does, what an LLM is trying to do in approximating the activity of a brain, is it has to do three-dimensional math, vectors and matrices, and GPUs are just not very good at that. So there have been some innovations around things called TPUs, tensor processing units, started inside Google. And there was this guy, Jonathan, who literally invented the TPU. Chamath went to him and said, hey, we don't want this to just be for Google. We want it to be for all mankind. So he spun him out into his company, Grok. Took him about 6 years to get from idea to silicon. But now they have a chip that works. Well, okay, how does this all relate? It's a really long prelude, Mark, to how does this all relate to the Middle East? Well, Saudi Arabia has this gigantic fund, the Permanent Investment Fund. It's almost $1 trillion with a T. I'm not sure if I think it's bigger than Norge's, but I think they go back and forth as to who's number one. But this fund has a mandate to increase the diversity of the economy of Saudi Arabia away from just oil. And, one of the premises we have for Morgan Creek Digital is this essence that the D in our ABCDs, data, is perhaps the most important asset of the new computer age, of the digital age, in that, as Larry Ellison said, data is the new oil. Well, it's really appropriate when you think about it from the standpoint of the Middle East. And, oil sitting under the ground, it has some value. I mean, you can approximate what value it will have if you can extract it and then refine it, process it, but most importantly, distribute it and get in the hands of people who actually use it. And so same thing with data. Data in its raw form isn't actually very valuable. In fact, 52%-ish, that's the estimates, of data that sits in corporate databases and government databases and, in our phones and every place else is tracking us, is dark. It's not actually used. It's not in a form that can actually be processed or analyzed or utilized or distributed. And so, our whole premise for investing is this idea that you have to take the data, and you have to use blockchains to capture it, organize it, and store it. Then you have to use computer chips or computer platforms to analyze and process it. And then you have to use these AI tools to make decisions for this. So Saudi Arabia put together this big plan, and they use these gigantic funds created by oil wealth to diversify going forward. So they said, all right, we want to have the largest data center in the world for AI, which was a noble goal. And, that was their thing that they stated. And so they went around the world and they said, all right, well, should we buy a bunch of GPUs from NVIDIA? And they looked at that and said, well, okay, that's fine. And that would get us a big data center, but it would only be part of the puzzle. In fact, where there's a bigger opportunity is in this inference. And so they are partnering, Saudi Aramco and the PIF are partnering with Grok to build the world's largest inference data center. Pretty good for a company that, just raised money at about a 2.2 pre-money valuation, 2.85 post-money. So all that says is, why is Saudi Arabia doing this? Why are they investing so much capital into things like inference and data centers? It's because they want to, one, diversify their economy, but also they want to take this wealth they have and this long time horizon that they have and use it to their advantage. So they've spent a lot of money on consultants and advisors and partnerships with some of the best and brightest in the world. PIF made a $40 billion allocation to Andreessen Horowitz to help them invest in innovation, kind of our innovation as an asset class thesis. So what they see is everything from space to robotics to, they're even going so far as to things like time travel and, which gets way, way out there in terms of a possible versus probable. But they are pouring money into all things technical, which creates one incredible opportunity for the companies, many of which are based here in the States, but also in Asia, also interestingly in Europe, Latin America, and now increasingly in the Middle East itself. So there are a handful of venture capital funds that we met with that have sprouted up to fund innovation locally. There's one group that's actually going around asking people if they would, set up offices in their part of the world. We may or may not have that conversation, but, the offer was kind of, I won't say the offer was made, but the offer to have a discussion was made on our last trip. And,
Mark, I guess I'll announce myself. I've just been lurking here.
Oh, excellent. Hey,
I have been lurking in the shadows, but I will say that everything that you mentioned there it resonates so strongly. And I think as you kind of spoke about some of those areas, there are a couple of observations, Mark, and I'm sure you had them as well. In the Middle East, it's not this homogenous area. So each one of the places that we've been to has kind of its own flavor, right? Between the UAE, Qatar, and Saudi, and you could add Oman into there. So probably it's funny how this arc, flows. Saudi is the wealthiest and has the largest oil reserves. They have kind of the largest to invest, but they have had a real big preference for investing directly for companies based locally, as some of the others have as well. But they actually have not done a ton of investments into the crypto side because of things like Sharia compliance, which is, in alignment with kind of religious law. There are some limitations on what may be considered gray listed or blacklisted in some cases assets like Bitcoin. But there are some exceptions there when it comes to kind of pure infrastructure technology. So that has really kind of put their focus more towards things like AI, which was one of those kind of areas that we've seen a big transformation. And I guess maybe getting into some of the questions, Troy had a good question on energy consumption. We have seen the kind of shift occur from, just let's say investing upwards of 70% of funds in a sovereign directly from things like oil and gas and away from, those resources into things like technology. So now basically you're down to around 60% of sovereign wealth in the area invested into oil and gas. So you've got a huge reduction in terms of what you're actually seeing, and that's going into funds like ours. We hope it will. But in places like Saudi, they are really focused on AI now because of things like Sharia compliance. So in a place like the UAE, anybody who's been to Dubai, it's basically like the Las Vegas of the Middle East, right, Mark? So it's one of those places that's very flashy, it's very forward thinking, and they are, much more adaptable to things like Web3 and cryptocurrencies, which obviously, are powered by blockchains. So they've established some guidelines into the region where you have, things like VARA, which is the Virtual Asset Regulatory Authority. Imagine this to be a government agency that has established its mandate to create approvals for blockchain-based products and services and companies. It's kind of the opposite of what we see in the US, right? In the US, if you're a crypto company, you have to deal with, not one, not two, but sometimes multiple different agencies when it comes to getting things like a license, right? That might have to be a money transmitter license. You might have to get, other reps and warranties from a state level to be able to do business. What they've consolidated in the UAE, making business a lot faster and quicker, is this thing called Vara. And actually, one of our portfolio companies, HexTrust, was the first crypto company to receive that license. So they basically are now authorized to hold crypto assets, and other companies are coming in. So in addition to Hex, the first crypto exchange was approved recently in the UAE to trade different currencies. And what this is going to look like is a slow but quick entry into the area. Slow meaning companies are being cautious with, deploying on the ground resources. But once they make that bet, they're going to be putting in more and more time into the region. And we are as well. So I would say that the UAE is definitely the furthest along in the region for a crypto adoption. But when it comes to things like mining, they have kind of left that to other places like China and the US. Well, actually, not China, but let's say other places in Southeast Asia and the US. And they basically ceded that market to them as they kind of use some of those demands for the power grid on things like AI. In particular, I would say that Qatar is somewhere in the middle of a place like Saudi and the UAE. It's got, a massive oil supply, which will use many of those proceeds to invest away from things like oil and gas and into innovation as an asset class. And they will do both AI as well as crypto assets. And then the one that is kind of getting people's attention because it could be a big opportunity, but is not 100% of the way there yet, is a place in Oman. Capital we visited was Muscat. There are, I believe, a handful of venture capital firms in Oman. So not very many. What's interesting with the ones that we did meet with is they're all government backed. So that gives you a sense of how this alignment between, basically a state controlled monopoly command product like oil and gas, it's, kind of going away over time. So there needs to be a reinvestment into areas that can kind of find new growth. A big area you'll see is real estate and development, which obviously we don't touch in our portfolio. But once all of those deals kind of get sucked up, there needs to be the next jump in an investable asset. So you see a lot of investment just in the traditional things, right? The endowment model. We see the stocks and bonds, commodities, et cetera. But now increasingly, venture capital, private equity deals are really kind of now coming to the fold. And I guess maybe I'll toss it back over to you, Mark, and kind of have one other point on, some general observations in the area. Was we've seen also a lot coming in from the educational side. And I think one thing that we kind of, are being realistic about is these are areas that have, high concentration of wealth and capital investment. So that it will attract talent and it'll attract companies, but it won't necessarily create the incubator or the generation early to kind of have those minds ready to go in a place like, let's say, Silicon Valley, right? Where we kind of gave birth to the industry. So we're starting to see a little bit of that shift where you're seeing American universities, European universities coming into the Middle East in places like Abu Dhabi and Dubai and shutting up campuses there, like NYU, Cornell have campuses there. But you're also seeing things that are a little bit more local, like, for example, in UAE, there's the Mohammed bin Zayed University of AI. And actually, I think we shared a picture, Mark, on our social media of me standing next to the AI Institute. It was near our hotel by the Museum of the Futures. And so this kind of is a little bit of a symbol, but it really speaks to this gap where, okay, there needs to be sort of this organic workforce to be able to take advantage of some of these opportunities if you have this coming from the top to the bottom. So I'll sit back over to you, Mark, so you wanted to... No,
it's really all important and it's so many things to kind of double tap on and so much work to do in the sense that, yes, Dubai in particular as a Vegas element. You've all seen the pictures of the rave parties and the all-nighters and the DJs and the beautiful beaches and the beautiful people and the beautiful cars. And that's all there. It's definitely there. But my perception was that it was actually a little tiny bit of that in the evenings, but really to me it was Toronto, but nicer in the sense of, and what I mean by nicer is newer. And to me, Toronto is just a smaller form of New York, right? A more manageable form of New York, beautiful city. And Dubai itself is even more beautiful in terms of the architecture is stunning, and not every building looks the same, and it's all brand new. And now they have the traffic problems just like all big cities. But then you go to Abu Dhabi, which is much more suburban, I guess, for lack of a better term. I mean, it has some high rises and it has some downtown areas, but it's kind of more like Chicago-esque. It's a little quieter, not quite as flashy. And then you got, Saudi Arabia, which is kind of like the Midwest, right? It's older. The buildings are older. The infrastructure is older. It's a little crumbly. And so what Saudi did, MBS put together this Vision 2030, which is not that long from now, plan. And said, all right, we're going to focus on renewable energy and green initiatives. Okay, fine. That's saying we want to be more sustainable and wind and solar. Okay, that appeases a lot of people. The second tenet was this digital and technological innovation, which we've talked about. They're really, really, really focused on AI and other high-tech sectors. Then tourism and entertainment, they're going to struggle with that for a while, like I think for a long time. Dubai's got that in spades. There's lots of tourism into Dubai from Asia, India, the U.S. I mean, my flight back home to Newark was packed with people who had been there for big parties. So that's it. And then to X's point, the health and education, that's clearly important. To be successful in innovation, you need four things. You need research. They don't have it today. I mean, in certain areas they have expertise, but they don't really have great, universal or international global research universities. They've got, kind of places they were working with now to bring it there, and they got the money to spend, so they will get it, but it's not there yet. The next thing you need is venture capitalists, and they have some, but not enough. But there's plenty of good old-fashioned American and European and Asian venture capitalists willing to travel there and help. So that's not a problem. Then you need money. Well, they got lots of money. But what they're missing is, in the most part, is the analogs, right? The success stories, the people who've done it before, who can lead others, train others. And that's where education comes in. You've got to get people in a mindset of creation as opposed to just go work for the big Saudi Aramco. Then the last is manufacture and infrastructure. They don't want to go completely away from their roots, but they do. And they also realize they have to upgrade. They have to spend the money to make it, to compete with the flash that is Dubai. Now, Abu Dhabi, on the other hand, said more Chicago-esque kind of, the less flashy but equally progressive place. They have something called the Strategic Development Fund, and their focus areas are defense, security, aviation, aerospace, urban mobility, autonomous systems, robotics, and new energy technology. So they are focusing, significant venture capital dollars on what they call high growth, scalable tech companies, both locally, like they will give you $100 million check to move your company to there. But they also say internationally, if we can make good financial returns, we'll do that too. But they really understand things like satellite communications technology and rockets and propulsion, and we had really interesting conversations with the head of that group when we were over there. You go into these other parts. I said Dubai is the financial center. It is just a manageable form of New York. Lots of foreign firms have set up shop there. All the big dogs in the U.S. have big offices there and big amounts of people. And so the capital is flowing into the right places, and they will generate a couple things. One, they will generate lots of new jobs. They will generate lots of opportunity for innovators and creators. They will create, and ultimately, I think, from what we can tell, they will be successful in managing this transition to it'll never be a non-fossil fuels future, because so much of what we use to make the other things comes from fossil fuels. So it's kind of circular. You need fossil fuels to make plastics, and you got to transport stuff. And it's going to be a long time until we have airplanes that run on solar or battery. So I think there is this long duration plan to transition the economy. But the other thing that they have going in their favor is demographics, whereas the West suffers from this aging problem, right? Every single day, 10,000 people turn 65 in the U.S. and Europe, and Japan's way ahead of us in that regard. They have more people turning 85. And not that 65 to 85-year-olds aren't really good. I'm getting really close to that age, but it's that it's not your most productive time of life. It's not your most innovative time of life. It's not your most spending time of life. And so when you have younger populations, they tend to innovate more. They tend to spend more. They do cause inflation. That's one of the things that is challenging of younger populations, because they're not as productive in the way we measure productivity. So you got to, borrow from your customers to form a higher prices to train your young workers. But I think that they're making the investments that they saw China make, over the last 30 years. China graduates 450,000 STEM engineers every year. I mean, it's just a phenomenal number. And, the Middle East has seen that, and other parts of Asia have seen that. So to wrap some of this into it, X, I know in your first trip, you literally did the around the world tour. You started in the Middle East and then ended up out in Singapore and Hong Kong, and maybe talk a little bit about some things there.
Yeah, absolutely, Mark. And I think you hit on so many of the salient points in the Middle East on the demographics. And one big thing that'll kind of tie the both together is immigration. What we saw in Dubai was it is by far and away the most diverse when it comes to people coming from elsewhere. Up to 85% of the people living there were not originally born there, which is just a crazy stat. And the pace of that innovation is just wild, because you and I remark about there was nothing there prior to 1971, right? It was desert. And then kind of coming into a couple of years before that, between this alliance and the Six Emirates, you basically led to a rapid influx of wealth and infrastructure, once you discovered oil, right? And so when we kind of go over to Asia, you have a very different story. You have areas that are millennia old, right? Old. And so within Singapore, though, it's kind of an interesting point, because you do have a lot of demographics there, where you have a lot of people actually coming in from China that are seeking new immigration. You have, Singapore itself was the declared free state from Malaysia in this, I believe, around a similar time. And what that meant was no tax, kind of like the UAE, which kind of allowed private enterprise to thrive a little bit and create a little bit of a haven for folks that are looking to not only park assets, but invest those assets and kind of the growth in infrastructure. And what this meant was the capital of DeFi out in the East, because six, and this was out of the 23 mark, 6 out of the top 10 countries by transaction volume are in Asia, right? India, Vietnam, the Philippines, Indonesia, Pakistan, and Thailand, right? So that basically means that 6 out of the top 10 countries in crypto purchasing power are located where? So overwhelmingly the majority, with DeFi and institutional drivers really kind of being the key to that. We'll point again to Hex, which is a company that we've invested in early stage, that has gone on to really become the leading independent custodian. They actually custody crypto assets for the Bank of Singapore, and they are one of the few regulated entities out in Asia. And I think when folks in the US, we think about, what's happening globally when it comes to tech and innovation, we think about Asia as a place that's always led this, whether it was, kind of their lead in computers in the 80s or their lead within telecom in the 90s, or, now what we're seeing as far as their lead in DeFi and other financial instruments like options and futures within crypto. It gives the traveler an idea to look at what could be another future in the US, right? In the US, we have this kind of legacy. I think not only do we deal with tech debt, but we also have legacy financial debt with the institutions that are basically tasked with custodying our assets, as well as just the way that commerce is getting done. And in a place like Singapore that's relatively new and a lot of people are coming from elsewhere, it gives you an opportunity to sort of flip that script. In Hong Kong, it was a little bit different because Hong Kong has really been more of a proxy for operations out in China, and it's increasingly being that way, especially lately. But it has really kind of provided us this idea that from the folks that used to be in mainland or places like Shanghai, they're going over to Hong Kong, and either they're shutting shop up there or they're jumping into Singapore to really kind of take advantage of what's to offer in DeFi. There still is a lot of activity when it comes to things like HPC or high performance compute, because Mark, maybe we can spend a segment and talk a little bit about a lot of the things that happened in Taiwan, obviously, which really accelerates and drives this as part of our thesis, artificial intelligence, blockchain chips, and big data. So in that part of the world, you're talking about the majority of where high performance compute is created and assembled. And so a lot of the companies, they have now three of the things that you'll need for this, as Mark highlighted. You have the people, because that's just where the majority of people on the planet are located. You have actually great amount of education, because you just have more people that will go into these type of industries. And you also have the actual raw materials that are getting created there and invested there. So what you're now looking for is kind of the entrepreneurial and the startup culture, which has become now even more pervasive in places like Singapore, where folks are coming from abroad and looking to grow businesses there.
Yeah, no, I think what's really interesting about that particular story, X, is, Taiwan has a near monopoly. It's not a complete monopoly, but a near monopoly on the production of the highest end chips in the CPU and GPU space. Now, when we jump into the next iteration of TPUs and VPUs and LPUs, they actually don't. So there's some interesting information content there. And the other issue is, I tell the story all the time that, everybody worries about Taiwan and China and the relationship there, and which one is our ally, and we're going to go to war of the South China Sea. And I always find it kind of interesting in the sense that people say, China's going to invade Taiwan and take it back. I'm just here to tell you that China doesn't think they need to take it back, because China thinks it's China. And the reason I say that is, one, we have people on the ground, and have had people on the ground there for 20 years, and they talk to, higher up in the administration, and that's one reason. But the real reason is, we have a conference room table here, and it was made in China. We wanted to have it made in the U.S. here in North Carolina, but no one could figure out how to do it, because we wanted to have a map in the tables. And we have 5 tables. We have a main boardroom table has the world map, and then we have a Brazil, Russia, India, and China back for the old BRICS before Saudi joined. And long story short, we got them from China, and it took a while, but it ended up costing about 20 cents on the dollar versus what they quoted us here. But the funny thing about it is the main map, there's no UK, which was clearly intentional. And in the China conference room, Taiwan is squarely part of China. I mean, there's just no messing around. I mean, it is part of China. So as is Hong Kong. And I think that issue creates a lot of tension and a lot of fear. But why it's really, really important is China, we believe, figured out that, the next war isn't really going to be fought with ships. It's going to be fought with chips. It's about cyber superiority. And we've seen that over and over and over again in terms of, hacks and interference and things. And so China has decided to diversify away from complete reliance on Taiwan for chip manufacturing. But they did something similar to what the U.S. did, is they didn't say, we're going to recreate the most sophisticated and the hardest to do, the little teeny tiny 2 nanometer, 3 nanometer, 5 nanometer, 4 nanometer, 7 nanometer. They said, we'll do the big stuff, right? We'll do the 12 and 16 and even larger because it's easier. And for most applications for chips, we don't need the little teeny tiny ones. Not everybody has to dominate, cell phones. So that decision is driving a lot of investment in the region. It's why there's so much in terms of AI patents and citations actually coming out of China. And while Singapore and Hong Kong are certainly thriving today, particularly as Singapore in particular as a hub for kind of like the Switzerland of the digital age, where mobile entrepreneurs are realizing, they don't want to be at the old fuddy-duddy Swiss bankers. They want to be at the cool kids in Singapore. China is making really meaningful strides in a lot of the technologies. So, when we look around the world for investment opportunities, which is what we do, we are seeing an increasing number of opportunities in Asia. We're seeing an increasing amount of innovation coming out of Asia. And this is really interesting. And 30 years ago, you could have made the argument that all China did was steal technology. It was true, right? They reverse engineered everything, including the bugs, right? Was the old joke, although it wasn't a joke. Well, today, we're actually copying a lot of their innovations in certain areas in technology. And that's not good or bad, right? Picasso said, good artists borrow, great artists steal. So, all's fair in technological innovation. But that part of the world has become much, much more focused on innovation for innovation's sake and for wealth creation's sake and for nationalism's sake. So one of the most interesting things that Xi said, I know there are a lot of people that hate Xi and all that good stuff, but one of the things I thought was interesting that he said is, we had a bunch of people that went and attacked China, including our incoming president, on multiple occasions, and all over the Davos crowd, piling on, saying, "Oh, we all hate China." And he said, "Well, you know what? That's okay. We can be self-sufficient. We're reaching a point where we can actually, we can grow the food for our people, and we can provide the resources. We've stockpiled all the really significant resources." And that's a really interesting dynamic because I think it's a negative trend personally. There's this move towards nationalism away from globalization. I don't like it. I think, Adam Smith was right 500 plus years ago. He's always been right. Comparative advantage is a good thing. And I think, our experience over the years of global collaboration and going where the good ideas are and the good entrepreneurs are has always been a good thing. That's why we're so excited about the recent activity that we've seen in places like the Middle East. And look, we've been in Asia for a very, very long time. We've had boots on the ground for a very, very long time. And we've always been impressed by the high levels of education, the high levels of entrepreneurship, the high levels of true innovation that we've seen and we've backed. Back to you.
I guess, well said, Mark. I think kind of like jumping in, you're kind of also seeing in common with those two regions is a little bit more regulatory clarity, right? So we mentioned VARA out in Dubai, the Virtual Asset Rights Authority, which give a little bit more clarity to know, okay, if I'm going to be in an industry that's in Web3, what do I need to do as far as registration and licenses are concerned to operate in market? In the US, that doesn't really exist. So it leaves a lot of folks looking abroad to figure out ways that they can grow. And they've chosen UAE. They've also chosen Singapore because it has something similar, known as the Monetary Authority of Singapore, the MAS. And that provides a clear framework and governance support for policies on DeFi. So that's led to things like a lot of notable DeFi projects and platforms like Sky Mavis and Bybit, Alchemy Pay, Ocean Protocol, CoinGecko, and really a lot of the big names that you see in DeFi. And I think this has led to a lot of sort of, diverse drivers of economic growth in Asia, driven by, let's highlight the Philippines, which leads crypto-related web traffic to gaming and gambling platforms. Gambling is huge in Southeast Asian cultures. So the alignment with certain cryptocurrencies creates a real sort of cultural undertone that makes it grow and thrive. So what you're, seeing further is larger growth in places like the Philippines, South Korea, Japan, and Hong Kong. They have higher DeFi activity compared to similar markets. And so when you're looking at this sort of government favorability and kind of outlooks on innovation, we're expecting some further growth in blockchain. These areas have provided just a lot more clarifying rules around security token offerings. So these are things where, if you guys recall, earlier this year, we had the passage of the first ETFs come aboard. There were 11 licenses granted. BlackRock took the lead, and followed by Fidelity and a couple others. Shortly thereafter, you started seeing other parts of the world adopt ETF strategies. Asia adopted their own, but they also adopted an ETF strategy for Ethereum, which hasn't yet gone through in a full acceleration in the area. They didn't add the staking component, but it sets up. They did that before the U.S. And what this sets up is an opportunity for multiple protocols to be brought into the hands of institutional investors, because now there was recent data that suggested in Singapore alone, 75% of institutional investors are planning an increase in digital asset allocation in 2024. If you would have done that this year, you'd have done quite well. Bitcoin is up over 100%, and growing, right? We've had a double peak year. So government outlook in these regions is quite favorable. There are now harvest funds in Hong Kong for spot Bitcoin ETFs. There's a total of 6 spot Bitcoin and ETH ETFs in Hong Kong dated back to May. And really the market of spot ETFs is expected to grow, reaching around 25% of US market. So the US is still the largest market for the ETFs, but that will narrow. And then I think you're going to see a lot more diverse offerings in the region. And what this will mean is a breakout. I think if you have the US market as the capital for the spot trading market on the ETF side and on the cryptocurrency side, Asia is going to continue, again, with some of the gambling cultural elements, to be the capital for derivatives and trading in the world. And we've already seen that occur. So as of earlier in Q1, crypto derivatives they hit a high of over 6 trillion, with Asia's market share alone being 70%. So one of our portfolio companies, Gemini, has made a really big bet in not so much pivoting their business as focusing their business around a couple of key drivers. And the growth of derivatives and options-based trading, they're centering all of those headquarter activities in places like Singapore for this very reason: regulatory clarity, friendliness, and acceptance of integration, and really this government support. And you're seeing that kind of combination between, okay, 75% of folks in the institutional investor class are expected to add on to their allocation to things like Web3. Well, the rest of other, the rest of the ABCDs, they've already been very, very well invested. We've talked about AI and how those chips are originating, in the region. And now crypto is the next natural adjacency to effectively become the underlying equity for the next generation of the internet, Mark.
No, absolutely. So to kind of bring it home here, I wanted to double tap on this idea of where innovation is happening and why it's important. So clearly the U.S., Google, Microsoft, OpenAI, Stanford Research, MIT Research, still at the forefront, and particularly in things like, large language models. But China very quietly has really become dominant in a couple areas: healthcare, facial recognition, surveillance, robotics. And interestingly, their Google, Baidu, has, by some measures, far superior AI technology than even the U.S. companies. Companies like Tencent and Alibaba are right there. And the real difference there is valuation, right? The valuation of the companies in the U.S. is at staggering levels, mind-blowing levels, and the valuation of those Chinese companies is really low. Europe, on the other hand, really playing a traffic cop role. They were early with GDPR and trying to set rules for engagement, and they continue to be like that. I don't know if I really call that innovation, but that is what they are known for in terms of the innovation rankings. The areas of focus that we see big opportunity in and are going to continue to see opportunities in this part of the world. Generative AI, it's clearly here to stay, and there's some really interesting ideas that people are so worried that it's going to replace humans. It's actually not. It's going to augment humans. It's going to make humans better, because it's going to take the stuff that isn't fun, like building the 200-page Excel spreadsheet. What's really fun is coming up with the estimates on growth or changes in margins or whatever it is that drive the output of those models. So it's going to allow our creativity to come into focus. An area that we're super excited about is edge AI, right? Most of the big AI programs, they use lots of electricity and lots of computing power. Still amazing when you think about how many gigawatts it takes to run OpenAI, and our brains work on 20 watts, less than a light bulb. But edge AI is chip technology like our company Encharge that is revolutionizing the heat that has to be dissipated, because they reduce the friction, because they reduce the distance between the memory and the processor by creating in-memory processing. Really interesting patent. And being able to run an AI model on your phone or your laptop in real time without having to be connected to the internet is going to be a game changer, absolute game changer. Huge, huge opportunity. Healthcare, whether it's diagnostics or whether it's drug development, we all know there. And there's an area where, again, Asia and China is winning, maybe because they don't have quite the same rules and regulations and limitations on clinical trials and the like. But the breakthroughs that they're having in things like cancer treatment, they have a company that now has like an 85% cure rate for liquid tumor cancers. Just amazing stuff. Cybersecurity, it's going to be a game of one-upsmanship, back and forth, and the companies that excel in helping us defend. My son literally just got hacked. He was part. A lot of us were part of this big leak where they got social security numbers, driver's license numbers, not just your name and address, but all of it. And they socially engineered, hacked his Gmail account, and went after his Coinbase account. Thankfully, Coinbase did a good job and didn't let his stuff get stolen. But it's crazy. All the discussion about ethical AI, we'll leave that for another day. Quantum is another area that we don't have time to talk about today, but you're going to see increasing innovation around quantum. We're still nowhere near where we need to be, but we are talking to companies every day that are making strides. The biggest thing is if you have to cool everything to 400 degrees, negative 400 degrees Kelvin, that's a problem. That's expensive. If you can do things at room temperature, that's really interesting. But the problem is room temperature today is only about, the number of qubits that a Pentium 5 would process that. So it's just not quite there yet. But all those are going to be really, really big. And I think the way we're going to see it is much of the innovation will start in the U.S. and China. It will move through places like Singapore as a gateway into places like the Middle East. And the Middle East is going to pay up big to become leaders in the application of these technology innovations going forward. So I don't know if there were any other questions that came in, or we can just wrap.
Yeah, well said, Mark. Yeah, do write any questions that come through. Thanks for folks tuning in, and we'll say, Mark, that our work is not yet done in this region. I'm actually getting ready to go there in 2 weeks, Mark. I know you're looking to continue, maybe getting another trip in this year. And the reason that we're doing that is because we're finding more and more opportunities to meet with folks, whether they are at the institutional level or family offices that have realized that they need to pivot away their business from kind of a centered cash cow, away from a lot of the vol that's been going on without much of the necessary payoff in stocks and bonds, and going towards innovation. And for us, that really means venture capital, Web3, and it's been a message that's been getting a global embrace. We're still I'd say we're out of the educational stage and we're towards the execution stage, where groups are jumping into diligence faster. They're taking their time to understand the risks and the upside that they're looking at, given kind of the recent struggles in the market, which for us creates an undeniable opportunity. You have markets prices being reset on startups back to 2017 levels in some cases, 2021 levels in most cases. So you have an opportunity for just growth based on cyclicality. And of course, when you kind of zoom out and see what this means from a crypto asset perspective, the trend is really uncanny, because we're in kind of this accumulation phase driven by things like the ETFs, not just in the US, but globally. And companies are responding to that. Our portfolio is increasingly being global. Morgan Creek has always had its footprints spread across the globe, but now more so than ever, we just are in the middle of our LATAM cohort, which we have partnered with Outlier Ventures to spin out an incubator. We invested in 5 companies in LATAM. For this program, we've invested in a total of 7, soon to be 8. And we're looking at replicating this model, early stage investing, usually first check in places like the Middle East and Asia. And so, as we do that, we'll have more of these, Mark. These are always fun to give us a chance to talk real time about what's been going on. So I'll toss it back to you to close us out and say thanks to everybody who was able to tune in.
All right. Thanks, X. And thanks everybody for tuning in. We will be back next week on a different topic, different time. And then X will take off to the Middle East. I'll be back in the first part of December. And we'll be back with you on a number of occasions to talk about what we find. So enjoy the rest of your day and into the weekend. Thanks a lot.
Thank you for joining us this week on Digital Currents. Check out our links to our website and social media in the show's description box. Please make sure to subscribe if you like what you hear. And remember, stay current.
This podcast should not be construed as investment advice nor solicitation for the sale of any security, advisory, or other service. Investment themes and ideas discussed may be owned by funds managed by the host and podcast guests. Any conflicts at the time of production have been mentioned by the host but are subject to change. Listeners should consult their personal financial advisors before making any investment decisions.